Data points, they're key. Plenty of them this week as well, and that's likely to affect, certainly currencies and beyond that, just as far as investor positioning is concerned. Let's get a reader on that. Peter McGuire joining us from XM. Peter, very good to talk to you. A bit of a globetrot at the moment. Hard to catch up with where you are at the moment.
Well, good morning, Andrew.
Great to catch up. All right, what are you watching at the moment? In fact, additional to that, we've just had China consumer inflation come out for March, slowing to at its slowest pace for 18 months. In fact, suggesting that demand weakness, producer deflation speeding up. What are you seeing in China at the moment?
Well, I think, and that's a good number, Andrew. And I've just noticed that the 300's up. It's been a nice day across Asia. So overall, Chinese demand, we're fairly sure that they'll continue their growth, and it's moving very, very strongly in the sense of its insatiable appetite for commodities, strong demand as far as energy, and the overall theme across Asia is one of growth. I'm currently in Mumbai, and it's extraordinary what we're seeing here. I haven't travelled for about 4 years, and just the amount of cranes, construction, infrastructure spend, and this is across the globe. So, yeah, I think they'll trade their way out fairly strongly.
Just while we're at it, then, Pete, take advantage of the fact that you're in India at the moment. I've just been going through business and consumer confidence here locally. How would you describe it in India?
I'm quite astounded, actually. I mean, when you're looking at Mumbai, Andrew, it's a city with 20 million plus, and the amount of construction here is just incredible, 24 hours a day, and major projects from railway networks to extensions of roadways that are going to really assist the consumer and assist everyone here as far as the population. And you've got to just be, I think, swept up with the overall enthusiasm of the nation. It's a young country in the sense of age, and just quite extraordinary. And their stock markets are performing very well, and there's a high level of confidence here post-COVID.
Now, Pete, also data-wise out of the States, of course, on Friday we had the non-farm payrolls. Coming in pretty much as expected. Also indication of their wages growth, perhaps coming off a little. How did you see that play out? This, of course, is ahead of the key consumer price index midweek.
Yeah, out tomorrow. Yeah, 236,000 for March. So that was fairly strong. Considering, Andrew, it was fairly strong and the market liked it. We've just got to see how, Jay Powell and those numbers drop this week as far as US dollar and what the sentiment is there. We've got earnings starting on Friday as far as the big banks, or within the next couple of days anyway, reporting. So overall, I think it's relatively strong, and I'm going to be sitting here breathing in, I think, a level of confidence, because we've just got to work through what happens in the next couple of weeks. There's some geopolitical tensions, certainly, but overall, I'm fairly content with the numbers coming out, and, the wage, well, that's just another matter of doing business.
What are you observing in the trends with the US dollar at the moment, Pete, off the back of that data? Interesting also that pair with the yen. We've heard more commentary from the new boss at the Bank of Japan.
Yeah, it's 133.7 for the yen. It's been very choppy and great for trading, Andrew, because it just, that whipsawing. You've got a US dollar index sitting at about 102.30. I won't be surprised we've just got to see the rhetoric coming from Jay Powell. But if we'll see how the consumer numbers are as far as CPI, and then you're looking at if Jay Powell and his thoughts. If there isn't a rate rise, and I think it's a 50-50 at the moment for the Fed, I think the US dollar will come under pressure to the downside, and that could be a nice time for the yen. So yeah, it's certainly action-packed if you're looking at trading currencies at the moment.
Well, how are you seeing the Aussie at the moment? It's dropped to about a 1 month low. Came off over the weekend. What are you seeing there at the moment then?
Well, it's flat. You're still sitting at 66 and 2/3. It just doesn't seem to be. It seems to be very range bound, and there's a bit of movement there, but nothing extraordinary like you've seen across other currencies, Andrew. So at the moment, it's not one to really keep a focus on for trading. We want to see some movement, and we want to see big just big moves that we're used to with the Aussie, and it's certainly taking a holiday at the moment.
Yeah, look, it came off little, obviously, off the back of that decision last week from the RBA to leave rates on hold. Speaking of which, Bank of Canada, of course, that's one step ahead of the RBA, having left rates on hold at its last meeting. Speculation that perhaps, or bets that it will do the same at its next meeting. What are you seeing there, and how that's playing out as far as the Canadian dollar is concerned?
Well, the loonie, I tell you what, it's been pretty choppy and it's been great for trading. We're sitting there at around about 1.35. But what's interesting with Bank of Canada, Andrew, is there's 85% chance they'll do, there would be no movement, but there's a 15% chance you'll see a rate cut. So, wow, this is, it's all moving, and a lot of traders are really all over that market because it's just offering great opportunity globally against that US dollar and against the other cross rates. So, yeah, we're keeping a close eye on what happens with the Bank of Canada this week, and this could be the start of seeing a back-off strategy across other central banks. Maybe not for the POM, but yeah.
Yeah, maybe not ECB and Bank of England, but elsewhere, Pete, what's this telling you with inflation largely having seen a peak, certainly, that perhaps central banks will now consider hitting the pause button, as we've seen with Canada and Australia, with the potential to begin cutting perhaps later in the year?
Well, that could be the case, Andrew. Yes, certainly. I didn't like what I saw last Sunday week. I was in Dubai, and the OPEC Plus numbers as far as production, and that really put a big rocket under crude. So if crude can hold at these sort of levels, Andrew, then that's a good sign. But we've just got to wait and see the impact that has to CPI and inflation moving forward. But we're all sitting here saying, we're right. If it stays there, then there are other markets to trade, and I think that could be quite an exciting 3 to 6 months ahead of us.